I would tell you that outside of the US, the SEC case, had almost no impact on our ability to get conversations and projects going with central banks. I know here in the US, we focus a lot on the US, that's what you'd expect, but the reality is that the rest of the world does not see things the same way. I think it's been clear for a while that countries like the UK and Switzerland and Japan have been very clear that XRP is not a security. So anyway, moving on to the CBDC side, it's not really been an impediment. Since we started 2.5 years ago on this project, we've announced 5 different countries that are working with us. We have a similar number that are not announced, and then we have 20 plus other active discussions underway. So from my point of view, it's great that we've got this victory. It doesn't dramatically change the work that I'm working on with central banks around the world.
You want to take one? Go for it. The first one's for you. IMF. Do you see IMF holding crypto assets in the future? I did not put that up there.
Remember, I'm from the legal department. I'm supposed to be very conservative about these things. I don't want to go into great details about
Maybe
the IMF.
I should take what the IMF is going to do. I think we stunned Ross into silence with that one.
For that to happen, okay, under the current legal framework, some country would have to use a crypto asset as its currency.
I believe that there can be 2 existing world reserve currencies to simultaneously exist.
I do, and I think that could happen. I think it's quite realistic that a lot of the world is just done with the dollar as the reserve currency. And I think that there's a lot of places that are willing to try something else. And one of my scenarios, and I don't think it's going to play out quickly, but like one of my wild case success scenarios for a digital asset is if countries start to realize that the US dollar is not going to be the reserve currency forever. Other things are going to be the reserve currency. And the same thing that we saw with banks, like people, when we started selling software to banks, people would say to me, why would a bank use something that like you guys were selling them when they could use something that was like made by banks? And what they didn't realize is that, only like 10 banks in the country, on the planet, are Deutsche Bank, HSBC, Credit Suisse, JP Morgan Chase, like the ones who would build a system that the entire planet would run on. For the rest of the banks, that's 6,000 smaller banks, those are their biggest, strongest competitors. Those are the entities they hate the most. They would not want to use the system built and maintained by them because it's going to be biased in favor of them, their biggest and strongest competitors. And I think the same thing could happen to nations. Like every nation would love for their currency to be the world reserve currency. That's helped the U.S., that's grown the U.S. economy, quote unquote, unfairly by leaps and bounds for decades. And every other country would be like, yeah, we'd like to have the world be the world's reserve currency. But the only countries that could possibly pull it off is the U.S. holding its position, maybe the EU, maybe Russia, maybe 1 or 2 others. But realistically, most countries know that if there's going to be a new world reserve currency that's a country's currency, it's not going to be them. And so they might actually prefer a currency that nobody can control to one that's controlled by their largest geopolitical rivals. And so that's like what I think is the biggest possible success scenario for digital assets. If these countries are like, okay, well, the US dollar can't hold on forever, but it's not going to be our currency because no one's going to want to repeat the US dollar scenario. Nobody but the EU wants the EU to replace the dollar, right? Nobody but Russia wants the ruble to replace the dollar. Nobody but China wants the yuan to replace the dollar. So maybe they could settle on a currency that nobody could control rather than one controlled by their most powerful geopolitical rival. So if you want a success scenario, that's the one that I think is the most likely.
But the money question is, how do you get everybody to agree?
Well, I mean, they might agree if the alternative is that their geopolitical rivals force some new replacement for the dollar that's not, if they just replace, the old boss with a new boss. If the choice is no boss, if that happens to make a bunch of cryptocurrency people rich, I don't think they're going to see that as too much of a minus.
Committee members, thank you so much for inviting us here today. We really appreciate it.
Being here.
Thank you. So I'm Chris Larson. I'm the CEO and co-founder of Ripple Labs. Ripple Labs is a software company based in San Francisco. We're at just over 100 employees today. About 2/3 of those are engineers. We're trying to bring together a combination of technologists with deep experience in cryptography, with financial experts that understand the basic plumbing of our global financial system, as well as regulators. We just added Gene Sperling recently to our board, used to be the chief economics advisor under both Presidents Clinton and Obama. And so what we see that's important about this technology, this distributed ledger technology, isn't so much that there's a creation of a new currency for the world. We actually don't think the world needs a new currency, has plenty of currencies. We think the big problem is moving those currencies around efficiently, either globally or even domestically. So if you look at the way money moves today, we have really a series of closed-loop systems. The U.S. system is actually not connected to the European system or Australia's system or China's system. And the only way that those value or payment systems talk to each other is through fairly antiquated technology and processes like correspondent banking, for example. So the problem with that is, I can literally send a package to Europe faster than I can send money there. So our current value exchange system is very slow, 2+ days minimum. It's actually very expensive for banks in terms of capital they have to put up and fees they have to pay the correspondent banks. There's actually quite a bit of risk in the middle. Payments fail all the time while being transferred. And there's sort of a key lack of competition for foreign exchange and sort of liquidity in our global payment systems. So what we see these technologies for being important today is addressing that need of banks to move value internationally and domestically. So we actually don't think today there's a particularly strong consumer or merchant value proposition. We think there absolutely will be, but we think right now these technologies can actually serve banks as sort of a key missing settlement infrastructure at the bottom of the payment stack. So leaving alone the application layer that banks use, the custodian of asset layer that banks provide, and even the rule setting that NACHA and SEPA in Europe provide today. This would really just address allowing value to settle in seconds instead of days, without the need of banks using an intermediary like a correspondent bank. Without the need of banks using an intermediary like a correspondent bank, banks could settle directly without risk of failure in the middle, and providing sort of new fundamental levels of competition for foreign exchange and liquidity. And kind of stepping way back, we agree that this is the beginning of an internet of value. That is now possible. It wasn't possible before Bitcoin. Bitcoin showed it was possible to do this. Ripple's taking that using a different technology based on the same principles. But the key thing is we think just like the early days of the internet of knowledge, going back 20 years ago, that internet would not have value unless you got the key custodians of knowledge on board, the universities, the research facilities, think ARPANET, Stanford. We think we're in that same period with the internet of value, that before these technologies have key utility, we have to get the custodians of value on board first. And those are the banks, financial institutions, market makers. Then I think we're set up where these things can have tremendous value across the board. And so again, the value these things bring are speed of payments, seconds from days, the ability to correspond directly, bank to bank, with much less counterparty risk in process, and with fundamentally more competition for foreign exchange and liquidity for those institutions, which will trickle down to the businesses and consumers that use those institutions. And I'm happy to answer any other questions about our technology or the company. And again, thank you so much for allowing us to be here.
SWIFT is the preeminent messaging system for the financial industry, which covers, say, payments, FX, trade, in terms of securities, etc., Nostra reconciliations, etc. What we're looking with the crypto, though, is where SWIFT would have a store and forward system for most of its payment transactions, where you need service level agreements that in a certain time I will do something, but payment turns up at a certain time during the day. Here we're looking at the new network styles which allow instant, real-time movement movement of the funds and visibility of those funds as well. So we would not have a situation where banks need to come back to you and say, have my funds arrived? It's 3 days later, I need to find out or find query messages moving around the network. There's nothing like that. I don't believe Ripple is going to replace SWIFT. Ripple is one of the complementary networks which is going to allow those institutions who need real time to make use of that. And I think we're also seeing that SWIFT are changing their network capability so that real time will be a possibility as well. But we may also see Ripple XRP moving across the SWIFT network as a currency when we're perhaps...
You mentioned the speed of cross-border payments and the opaqueness of that process, and I guess it's also error-prone to some extent with SWIFT. Santander seems to be trying to approach it with a partnership with Ripple. Just curious what your thoughts are on that.
So I do think that of the use cases out there, cross-border is one of the most compelling. We know that intermediation chains cross-border are long and quite opaque, and they're slow, and they can be quite costly. So my sense is that technology with appropriate safeguards could make a material impact and likely will. And it may well be through a partnership model. I don't want to pronounce on any particular approach, but there are a variety of partnerships out there that are trying to innovate and to reduce frictions and increase transparency for those cross-border transactions. In my sense, I'm fairly optimistic that there are some good solutions out there that don't necessitate a global stable coin.